Welcome to Markets Now and Report Analysis. I'm Michelle Rook along with John Heinberg with Total Farm Marketing. And John, let's just jump right into the report. Obviously, the bullish surprise was we did have soybean acres coming in quite a bit smaller than what we saw in the March intentions.
Very much so. We've seen this shift, and that was one of the thoughts in the marketplace that we could see some soybean acres shift over to the corn side, and that seems to be what has occurred here, at least according to the numbers USDA put out this morning. Soybean acres down to 83.5 million. That's down from that 87.7 million from the March intentions. And so that's obviously causing the big reaction in the market. On the flip side, you got corn picking up 3 million acres, or not quite that much, about 2 million acres from the March report at 94.1 versus 91.9. So again, we're seeing that shift over, and that's obviously weighing on prices pretty dramatically here, despite grain stocks coming in a little bit lower than expected for basically all three grains.
So where did the acres come from? Where did this shift happen, John?
Well, you go look at the numbers compared to last year. It looks like we just had a general gain across the board, but really I think the northern tier is where it was. North Dakota looks like they're about 1 million acres more than last year at this time frame, picking up about 500,000 each in Minnesota as well as South Dakota. We were kind of wondering what would happen when that weather turned a little more friendly for them up there, and producers just probably pushed the corn planter right through instead of shifting over into the bean side of the equation. There's still some bean acres that are unplanted out there yet, so we'll have to see how that kind of shakes out. I think that came into play a little bit as well. But at least at this time frame, it just feels like the northern tier picked up the bulk of those acres. But we saw gains as well as in the key I states too, with acres being gained in both Iowa and Illinois for corn planting this year.
But let's put the corn acres into perspective, because even though we're up over the March intentions, yield is probably going the other way. Will that offset it?
Well, we got a lot of things we're trying to balance in the corn market right now. Obviously, with the weather situations, we'll see what happens with the yield. In my mind, the top of this obviously off this trendline yield type projection. But at the same time, you're still looking at a demand picture that's extremely scary on the corn side of the equation. So that's one of those things that can balance out any yield reductions. Just with that jump in export demand that the USDA put into the new balance sheet, here we're looking at sales, for new crop. We're about 50% behind where we were last year at this pace. And for new crop corn sales, the USDA is projecting a 22% increase. So you could take a couple $100 million pretty easily off of that total, and that would easily offset any of the losses in yield, especially with those gained acres.
Yeah. So you feel like the guys up in the northern areas where they had a tough time getting in the field, once they got in there, they just kept planting corn? They didn't move over to beans?
That seems to be the trend, and that was something that just at that time frame where the market was and how things were acting, that was probably just let's get it done, let's get rolling. Things were rolling nicely instead of making that switch over. So again, it just feels like they pushed that corn crop in the ground. We always kind of say guys like planting corn, and the weather was really pretty good in that window. If you think about it overall, that corn planter just kept right on it rolling.
What about wheat? We didn't get a whole lot of shifting or changing in terms of acres, in terms of numbers there in any of the classes, did we?
No, we didn't. We basically a little bit less than what we thought we were going to see compared to the March intentions. But wheat's getting a little support today. If we're watching grain stocks, that's trading about 30 million bushels under expectations. Maybe that's reflecting some of the poor harvest that's starting to come online right now, as well as just some overall demand tones. Even though we haven't seen a lot on the export front, maybe we're using some things domestically, maybe with the price of corn where it was, we got a little more feed wheat usage, that type of thing. That's why we're seeing maybe some movement in that wheat market. So that report's fairly neutral, I would say, for wheat, with the exception of the stocks being about 30 million bushels under expectations.
So the abandoned acres that they talked about in the winter wheat areas, where do those all shake out?
We'll get that further down. That'll be in that September when we get those final wheat numbers, the small grains report at that time frame. Again, we're still kind of in the harvest window here. So again, we'll see more of those numbers down the road. But again, I think that lighter stocks number might be reflecting some of that softer harvest, as we've worked through some of those acres already, or we've seen those abandoned acres come in. But again, that'll probably wind up being in that September quarter, that grain stocks report, or that wheat report in September. Excuse me.
So let's talk about the price action. As you said, corn is down, soybeans up. where do you think we need to be price-wise to work the bigger acres into the corn equation and the lower acres into soybeans?
With the break today in corn, we'll just kind of focus there first. I've had a downside target, maybe around the 480 handle. We'll see if that's where we're headed. Obviously, right now we're kind of playing with those lows that we put back here, in the May-June window. So it's going to be a key spot. Again, a lot of it's going to see how the money wants to flow over the next few weeks. Obviously, with the holiday, the thin trade on Monday, it could be a pretty interesting, look here. Obviously, the weather, for the most part, the models have changed. I think that has obviously turned more negative. We'll still see where things are longer term in terms of yield and production. But, the way right now I think the market's feeling is that the weather is turning here, and the forecasts are kind of verifying that. So I think, again, I'm targeting that 480 window on the corn side. We've got some pretty decent support on the technical side there and some trend lines. We'll see if that's an area we go test. That might be a spot too. I might start looking at a little bit of ownership just in case that yield does not come together like we think it can, or it's affected longer term.
What about soybeans? November beans have to go back above 14, you think, here, or where?
I think that's a definite possibility that we go back and retest that 1378 spike high we had from last week, and then we'll see where we are from there. Again, still the demand's going to be a concern there. Those new crop bean sales aren't where we need them to be, but we did see a pickup by China, at least on the overnight, or at least reported today. Now there was rumors they were buying beans earlier in the week. So those new crop bean sales are still kind of fighting that long tail of that Brazil crop. So that's something we'll have to keep an eye on, and we need to see some sales pick up here. Maybe that indication that with China picking up U.S. beans for the fall delivery just might be a sign that, hey, things aren't where we think they are. And then you throw in a tighter grain stock picture that just kind of tightens up the thing overall in terms of what might be available supplies out there. But again, we got that 1380 area, which we poked at last week off that spike high before that EPA announcement came out. Kind of putting a hammer on it. Maybe we go back and test the $14 handle. We'll have to see what the upper momentum is after we get through, the rest of the weekend after the 4th of July.
Is wheat fairly priced here at this level? We're holding on to gains right now, but if corn keeps going down, does wheat have to follow eventually or not?
Our problem with wheat is even though the numbers really were fairly neutral, we still got to keep an eye on that global supply picture and what's happening with those prices. We still need to see product move, and that's still going to be something that's going to be a problem in that wheat market. To me, the global wheat price stays as a lid on anything that we see in a wheat rally. We saw that, basically with that hard sell-off after the run out earlier in the week here. So a little bit cautious there. If corn continues to slide, obviously being a competing grain, that'll make it very difficult, especially for spring wheat or Chicago wheat prices to kind of hang in there. KC wheat's going to be its own story just with the thinner acres and the abandonment and the harvest that's going on. That's less than what we need. But for right now, I think wheat's going to have a real hard time rallying here without any major bullish numbers, and we didn't get those today. All
right. Any final thoughts here before I let you go?
Again, it's going to stay extremely volatile. Today is just going to be kind of the rebalancing act with the end of the month, end of the quarter, first notice day for July futures today. So a lot of moving pieces going into the weekend with the holiday. To me, I think this market will probably really set its tone when we come back after the 4th of July. We'll get a good chance to look at the weather. Just be ready for some volatility here because it's going to continue.
Yeah, I was figuring that we'd have a lot of stuff to sort through here today and didn't know if the reports would lead or not. But thanks for joining us with your analysis, John Heinberg with Total Farm Marketing.